completely repriced in that SIBI, and then there's my stop. So if I see something that warrants a re-entry and I like it, then I'll go back in with one contract. All right, so you saw me get stopped out there. This is a re-entry with one contract. This is not live commentary, by the way. This is fast-forwarded footage with a voiceover. So I kind of just wanted to illustrate the benefit of using this risk management protocol that I like to use, which is cutting your risk in half after taking a loss. Okay, if for those who are going for funded challenges, prop firms, evals, if you already have a funded account, every time you take a loss, if you cut your risk in half on the next trade, you are protecting your equity curve. If that second trade were to be wrong again, the drawdown is not as drastic, it's very minimal, and you keep yourself in the game. So as ICT likes to say, one of my favorite quotes by him, the number one rule in trading is to preserve equity, protect your capital. Okay, making money and all that stuff is secondary, but you have to protect your capital. And here I'm outlining that fair value gap institutional order flow entry drill. That's what I use as my entry. Discord members obviously will have a more in-depth trade breakdown video. I have that ready tonight. Just give me some time and I'll notify you all once that's uploaded. End of year Discord sale, by the way, is going until December 31st. I don't do a lot of Discord sales. I think this is the first one I did this year. I know I did a giveaway, but I don't think I've done an actual sale. I only do 1 or 2 sales a year on the Discord, so you have until December 31st to get in there. Link in the description, all that good stuff. But back to what I was saying, and we're trading inside of a breaker between the, I'll outline it towards the end of the video, but the 2 highs there and that last down close candle, swing low, that's your breaker. We're trading inside of that. I wish I would have drawn it out sooner. But cutting your risk in half after a loss, in case you're wrong twice in a row, it just makes the drawdown so minimal. You can still recoup it with a couple of trades, and there it is, it's done. So you can see I'm annotating the buy side. So we're in that London close macro. Again, Discord members, we've talked about the 1050 to 1110 macro. It delivered like gangbusters, clockwork. This is something we've been studying in the reviews for quite some time now, and you're seeing it live here. So London close macro, we've ran out buy side. The morning session wasn't the cleanest, especially if you're looking at ES and Dow. It was a lot of deep retracements, taking out highs, taking out lows, taking out highs, taking out lows. Not the easiest session to trade. I did not care for anything going higher. I was not interested in buying anything this morning. You can see my trade earlier was a short. I had my eyes set on that sell side as a draw and the low of the weekly volume imbalance, which is that large red shaded region. I was going to use that as a partial. So I believe I'm about to outline this breaker in just a little bit. And this is paper, by the way, even though you're seeing dollar signs on the right. This is a paper trade because I want to illustrate the benefit of cutting your risk in half. So you can actually see realistically what that P&L will look like. But I'm not trading real money, live funds until January 12th in Discord. Okay. Until then, till January 12th, it's paper trading. So I'm already done for the year. All right, so delivery NASDAQ looks good. That fair value gap that's sitting right above the current swing high that we just formed, that staying open is a good signature for lower prices. Just getting a read for order flow. We're above the midnight open, above the 8:30 open. We've gapped higher at 9:30. Discord members, the trifecta, we've been talking about that. It's clear as day where NASDAQ wants to go. Now the delivery for majority of the morning session admittedly was kind of mediocre and high resistance, but I mean when all the stars are aligned like that, which is why we call it the trifecta, it's just a matter of capitalizing on it, even if you have to take a loss first. All right, getting some nice displacement towards that sell side. Beautiful. Let's remove that risk. And here I'm outlining that London close macro. We do have SMT at those highs as well. That high at around 1050 and then that high at around 1104. So There's a S&T divergence there. If you look at S&P, I can't remember if it's with S&P or Dow, but one of the indices made a higher high while NASDAQ failed to do so. We'll look at that in the breakdown in detail. So there's the breaker, and I'm outlining mean threshold. You can see us staying beneath that, which is good. And there's my limit order, 25,460 was my draw. You can see my exit one tick below that. And then here I'm showing the benefit of using one contract, recouping previous drawdown, and then some. So hopefully you found this insightful. I'll see you all in the next one. Peace.